Hey there, I'm your host Power of Trading, and I'm about to crack the code on a strategy so powerful, it's whispered about in hushed tones in the back rooms of Wall Street. Ever felt like you're staring at charts like a deer in headlights? Yeah, I've been there. But today, we're unlocking the secret hidden within every chart, a strategy that'll make you trade like a Jedi Master. Picture this, scalping minutes, swinging weeks, or holding long term with the same ruthless efficiency. Conquering Forex, crypto, and stocks like a boss. It's all possible with this one technique. The secret sauce? Supply and demand zones. Those magical levels where the market makes its biggest moves. Alright, it's time to equip our trading arsenal with these powerful tools. Let's head over to Trading View, Indicators tab and search for the supply and demand based pattern indicator. This bad boy is like our X-ray vision, revealing the hidden forces of the market. But a true trader doesn't just rely on indicators alone. We also need to stay ahead of the market news, as it can often trigger big moves. That's where Fast Bull's economic calendar comes in. Showing you what's about to go down before it even happens. And for those who want to tap into the power of artificial intelligence, and send you high probability trade signals. Want proof? They even give you weekly performance reports so you can see exactly how well it's been doing. Talk about transparency. And the best part? You can access them all for free. Click the link below to unlock this powerful arsenal and start dominating your trades. Time to test drive this powerhouse in action. As you saw with the Euro USD, this beauty already whispered 2 profitable trades. Let's peek under the hood and fine-tune it for your mastery. See how the indicator identified trend turning points? Cool, right? Now, let's give it a personal touch. Tweaking candle health to 20 makes it more responsive to recent price changes, while setting base max retracement to 1 adds precision to potential reversal zones. Play with colors and styles in the Style tab, but remember, mastering comes with practice. Now, meet the ultimate RSI, our partner in crime for pinpointing entry points. We hunt for buy signals in the oversold zone, think bargain hunter's paradise, and sell signals in the overbought zone, sell before it pops. I personally stick with the default settings, but go wild with colors and thickness if you like. Alright, time to make our move. Here's how we'll execute a precision entry for a long position, maximizing our chances of success. First, we spot the demand zone, where buyers are eager to snap up bargains. Think of it as a launching pad for potential price jumps. When a bullish candle closes above this zone, it's like a rocket getting ready to lift off. But we need more confirmation before we hit the buy button. That's where bullish candlestick patterns come in, like our trusty hammer or engulfing patterns. These formations signal that buyers are taking control, and the odds of a price surge are increasing. But we're not done yet. Let's consult our trusty RSI indicator for the final go-ahead. The RSI's moving averages are like traffic lights for trading. When the white line crosses above the red line, it's like a green light flashing, signaling a potential uptrend. That's our cue to execute the long position. Now, let's protect our position with a stop loss, like a safety net. Place it below the swing low or a few pips below the demand zone. And for our profit target, we'll aim for a risk to reward ratio of 1 to 2, meaning we're willing to risk $1 to potentially gain 2. That's smart trading. Remember, discipline is key in trading. Stick to your risk management plan, and don't get tempted to deviate. And keep in mind that this strategy thrives during the hustle and bustle of the London and New York sessions. Outside those hours, the market might be too sleepy for reliable signals. Now, let's flip the script and learn how to pinpoint those prime selling opportunities. Ready to ride the downtrend wave? Here's how we'll execute a smooth sell entry. First, we identify the supply zone, where sellers are eager to unload their positions. Think of it as a trapdoor ready to release the price downward. When a bearish candle closes below this zone, it's like the trapdoor opening, signaling a potential decline. But we need more evidence before we pull the sell trigger. That's where bearish candlestick patterns come in, like the ominous shooting star or the gloomy engulfing pattern. These formations hint that sellers are gaining the upper hand, and the price could be headed for a tumble. But before we dive in, let's double check with our RSI indicator. The RSI's moving averages act as our trend sensing radar. When the white line crosses below the red line in the overbought zone, it's like a warning siren, signaling a potential reversal. That's our cue to initiate the sell position. To protect our profits, we'll set a stop loss above the swing high or a few pips above the supply zone. This acts as our safety net in case the trend unexpectedly reverses. And for our profit target, we'll maintain a risk to reward ratio of 1 to 2, aiming for potential gains that outweigh our potential losses. Remember, trading isn't one size fits all. Adapt these rules to match your personal risk tolerance and trading style. Some like to play it safe, while others prefer to ride the waves more aggressively. Find what works best for you, and always stay in control of your trades. So let us now execute 50 trades and check its results. Results are in after 50 trades. The test is truly amazing. So let's check it out. Now, I used a 30-minute time frame. This was done using a 1:2 risk to reward ratio on GBP USD. And it took 1 month of price data to find the 50 trade signals, which is actually very good. There were 36 winners and 14 losses. The win rate is 78%. The gain on the account was 156%, and that's risking 4% per trade. That means if you had a $1,000 account, you can gain at least $1,600 profit using only one currency pair. The good thing about this strategy is that you only have to risk 2% on each trade. It is still very profitable. You can use more than one currency pair and you can gain more money with this strategy. That's all for today. I hope you found this helpful and informative. If you did, give this video a big thumbs up and consider subscribing for more awesome content like this.